Today, Unnatural acts as advertised. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and property news with a distinctively Australian flavour. One of the announcements in today's launch was the Coalition's commitment to help first home buyers save for a deposit sooner by lowering the required deposit from about 20% to 5%. At the moment, above a loan to value of 70 or 80%, borrowers will have to purchase expensive lenders' mortgage insurance and find that bigger deposit. But now the Coalition is offering an alternative path. Here is the announcement.
We want to help make the dreams of first home buyers a reality. So we have decided to go further at this election and pledge to adopt a scheme similar to what's been running by our Kiwi cousins in New Zealand for many years now. Our new first home loan deposit scheme, I announced today, will enable first homeowners to buy their home with a deposit of down to 5%. This will make a big difference, cutting the time taken to save for a deposit by at least half and more. This will work by the government's National Housing Finance and Investment Corporation that I established as Treasurer, supporting these first home borrowers. That will include guaranteeing to approved applicants the additional loan amount taken out by the first home buyer to cover the difference between the lower deposit of, say, 5% and the 20% of the value of that property. This scheme would give preference to working with the smaller banks and the non-bank lenders to boost competition. Of course, the lenders will be still the ones lending the money. They would still do all the normal checks on the borrowers to make sure that they can meet their repayments. This isn't free money. The scheme will be available to first home buyers with an income of up to $125,000 or a couple with $200,000 where they are both first home buyers. The support would stay in place for the life of the loan, and when they refinance in a few years' time, when the equity increases, which it would under a Liberal National government, then that's when the guarantee ceases. But they've got their first leg on the first rung of the ladder.
So the scheme means that eligible first home buyers would not have to pay mortgage insurance, and instead the government would guarantee the difference between that lower deposit down to 5% and the industry standard, say, 20%, although of course some lenders are now asking for 30% deposits. The first home loan deposit scheme will, they say, be available from January the 1st for those who have saved at least 5% of the value of the home, but it will also be subject to limits for each market. And of course, the full details of the scheme have not yet been released. But Morrison said it was aimed at allowing people to get onto the property ladder sooner. Now, the Labour Party has responded by promising to match the Coalition proposal. We back genuine support for first home buyers. That's why we're also reforming negative gearing for future purchases, so young Australians don't have to keep losing out to wealthy property speculators, Shadow Treasurer Chris Bowen said. After 6 years of failure and 6 days before an election, the Liberals are desperately trying to tell young Australians they understand their struggles to buy their first home. Now, the government proposal is actually a significant departure from previous attempts to help younger people trying to get into the housing market. And most of these initiatives, anyway, only just lift prices and don't really help much at all. And it requires $500 million in guarantees and possibly more over time, but it won't be open-ended. The government intends to borrow the $500 million so it can invest the money in the National Housing Finance and Investment Corporation, which would offer the guarantees to aspiring homeowners. The $500 million cost of the policy does not deepen the budget deficit or weaken future surpluses for either major party, as it's an investment, and so it will be treated as a capital item rather than an expenditure. Quite a neat trick, really. The scheme would be capped at 10,000 loans each year That's about 1/10 of the market, given estimates that there were about 100,000 loans to first home buyers last year. And the scheme will be available to first home buyers with an income of up to $125,000, or for a couple with $200,000, where they are both first home buyers. And Morrison said the support would stay in place for the life of the loan, and when they refinance in a few years' time, when the equity increases, well, good luck with that, which it would under a Liberal national government, he said, then that's when the guarantee ceases. The proposal, of course, takes on Labour over property prices and younger Australians, as opposition leader Bill Shorten seeks to raise $32 billion over 10 years from changes to negative gearing and capital gains tax, but plays down the impact of his policy on the real estate market. The value of homes that can be purchased under the scheme will be determined on a regional basis, reflecting the different property markets across Australia, the coalition said in a press release after Morrison's speech. And this suggests that the government would have to apply a cap on the value of the homes that would qualify, and therefore limit the exposure to the Commonwealth from the guarantees over 15% of the loans. And the government has not said what these caps would be, but it assumes that most first home buyers would not use the scheme. And the latest data from the ABS shows that the proportion of loans to first-time buyers is around 18%. And in fact, momentum recently has been easing somewhat. But I am really concerned about this move. It's completely expected. I've been talking for some time about unnatural acts, and this is indeed one of those. Now, I know first-time buyers want to get into the market, but enticing them in with the ability to be able to just use 5% and then get into the market in a falling market is sheer folly. And clearly this is not going to be enough to turn the market around. Indeed, you could argue that it creates even more issues. For example, it will change the impact of lenders' mortgage insurers and how they run their businesses. And it also means that there will be risks to government coffers over the medium term if, in fact, home prices do not recover. And here's the rub. My modelling suggests that we could be in for a 5 to 10 year sideways drift or downward drift before home prices begin to move up again. And I suspect no one has factored that into the calculations. But the bottom line is this. I expect to see more unnatural acts because everyone is absolutely desperate to try and create more momentum in the housing sector. The only way that can be done is to make loans easier and essentially increase the amount of debt in the system. But as we discussed yesterday in our long post, that is just kicking the can down the road and creating more problems later. We are in a debt crisis. We're in a situation where the last thing to be done is to just encourage more people to borrow more. And my advice to any first-time buyers who might be excited by this move is ask yourself the question, what happens if prices do continue to slide over the medium term? Because negative equity is a killer. And we'll be discussing this in a separate post, which is also up on the DFA site. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.